Okay, welcome back. Just 3 minutes to go for the pre-open session. Anuj is here to tell us what he's making of things. Anuj, I mean, so close, yet not so far, but not quite there yet.
Yes, morning, guys. The market showing typical behavior of a matured rally where there's a bit of a rotation out there. So clearly, it's HDFC Bank versus the rest. If you see the last 2 days, ex of HDFC Bank, the market's not done anything. In fact, most of the FI money seems to be chasing HDFC Bank. Delivery volumes in HDFC Bank have been really huge over the last couple of days. The global cues are more or less positive because bond yields are down, dollar index is flat, and crude, which was the big worry yesterday, has declined sharply to 93 thereabout. And also there was a bit of a cool-off in positions yesterday without too much damage in the market, which is good news. If you look at the Nifty November futures, premium down to 50 points versus 75 points, put-call ratio down to 1.03 versus 1.21, and FIs longs down to 60%. All of this is a bit of a positive indicator. Just in the near term, Nifty is placed better than the Bank Nifty, though overall Bank Nifty is a stronger index. But because of IT, HDFC, and the fact that Nifty yesterday respected the lower end of the range, my sense is that could be the index to track. 18,225 to 18,300 is, of course, that big support zone for the Nifty. And the resistance comes in at 18,400, which was yesterday's high, and 18,500, which was from the options data, if you look at the call options data. I think Bank Nifty is very interesting because today you also have the financial Nifty expiry. So in that sense, HDFC twins would be crucial. But clearly there's a bit of a rotation from ICICI Bank to HDFC Bank. So you need to, and they sort of net themselves out with the same weight of about 25%. So need to see if ICICI Bank resumes rally or not. In terms of levels to watch, 42,231, yesterday's high, but bigger resistance is Friday's high, 42,345. Let's see if we can take them out or not.
Okay, all right. Thanks a lot for that, Anuj. Well, let's get in some F&O strategies then. Ashish Chaturmurtha, Director, Head Research at JM Financial Services, who joins us. Hi, Ashish. Morning. What do you have for us today?
Good morning, Nigel. So I think, see, markets after hitting almost 18,300 trajectory, some kind of consolidation is taking place. And as Anuj mentioned, the rally is being driven by HDFC Bank because of very low participation in the last couple of months. And now I think there's trying to a catch-up rally which is taking place. But if you look at, there are other indices where money is getting rotated. One such sector is cement basket. The entire basket is looking quite promising, whether it's Ambuja Cement, Ultratech, ACC, or something like JK Lakshmi in the cash segment. But if I have to choose one, then Ambuja Cement is one where we are seeing very strong positioning in terms of derivatives setup is concerned. And also, if you look at the technical charts after consolidating for good 1 month, I think stock is again getting very strong traction in terms of momentum. So one can niche it along, keep 568 as a trading stop loss on upside. 610 would be my short-term target in Ambuja Cement. Larsen & Toubro Technology Services within the IT basket. This is one stock where we are seeing very strong build-up of positions, and also after good consolidation of 6 months, now LTTS is showing very strong traction. So keeping 3730 as a trading stop loss, one can initiate a long in Larsen & Toubro Technology Services. On upside, 4,000 would be my short-term target in the stock. And within the capital goods space, I think Larsen & Toubro is seeing some kind of consolidation. Last 4-5 days consolidation is taking place, but looking into the overall positioning from a 2-3 month perspective, it looks like a lot of long build-up has already happened in the stock, and this consolidation is eventually going to give you a breakout above 2000 trajectory and eventually going to go towards 2100 levels. So keeping 1975 as a trading stop loss, one can initiate a long in Larsen & Toubro for an upside target of 2100 levels.
All right, Ashish, have a great one. Thanks for joining in. By the way, the rupee has opened a tad bit strong this morning. So 81.26 was the close yesterday.
IRCON is another 2% higher. NDTV, I think the open offer, there's progress on the Adani open offer that is up 5%, circuit higher. Axis Cades is up about 5% as well. So this is the broader market. It's a lot quieter as compared to what we had going same time yesterday or over the last couple of days. IRCTC is selling off about 3.5. Of course, I mean, results reaction. Top traded stock as well. You mentioned Coal India, NMDC, which are lower. Lal Pathlab saw that 5-6% move yesterday higher. That is starting about 2% lower at about 24.34. And Aster DM, I think we mentioned that in the pre-open, that is down about 7% as well. Look at Radico as well. Radico is down 4%. And it's not just Radico. There is Global Spirits as well, which is down 7.5 in the same space. So, you know, that alcohol beverage space is seeing a bit of sell-off. VRL Logistics is another one which is down 8.5%. On decent volumes for this time of the day, 528 on VRL Logistics. On the index, I mean, it's still steady with about a 36 odd point. Again, 18,362. Sorry.
Just one word on Coal India. You know, it's because of the dividend payout. You know, that's the reason why, in fact, the stock is down. There was a 15 rupee dividend, so that explains why that stock is down. So, stripped of that, actually, the stock is a little bit higher in today's trading session. Just thought I'll point that out, and I think a ticker as well will run a line on that.
Okay, that's important to point out. Thanks for that, Nigel. But you know, on Greaves Cotton, right? Just want to mention it's the big mover right now, almost a 10% rally. It's still a distance away from its 52-week high.
Yes.
So the 52-week high is 258 rupees. So perhaps it's still got some time to go. And these are businesses, right, that are these new age businesses that are surviving. Of course, a very, very hard space to be in because of the kind of PE funding that's going into electric vehicles and the cash burn that they're ready to see. So people, so businesses like Greaves Cotton that are still managing to see profitability is a big deal.
You know, I'm always amazed. He just said the management confirmed that the average sale price is about 1 lakh, right? Just under 1 lakh rupees per vehicle. I mean, that is high, right, for a two-wheeler. And one kind of sees that, I mean, the general talk is that as battery prices come off, these prices will drop. I don't know what a regular IC two-wheeler costs. I mean, I think, but not a lakh, right?
No,
I mean,
it's,
I think
it's actually moved up,
A
Prashant.
lot
over the
more.
years.
It's a lot more than
It's moved up.
my
Yep.
time.
It's moved up,
When was the
Prashant.
last time you bought a two-wheeler?
Prashant.
But I mean, you know, it's a high price point. I was
Nigel
compared
rides
to
a bike which is, I think, 3 lakhs. What, 3 lakhs?
I ride an Interceptor that's 650cc, so I think, you know, the
and he
cost
takes out one for every week, right? Different one for every week.
No, just one, just one.
But you know what's also happening in this space is there are a lot of non-branded companies that are making these electric vehicles. So they're just sort of changing the engine into electric, the scooters I'm talking about, electric scooters. So that is another big issue for these branded companies like, you know, the Bajajes of the world to sustain.
Yeah, absolutely. Well, so that's a bit on electric two-wheelers. Gautam Trivedi is our market master of the day. He's co-founder and managing partner at Napian Capital. He's joining us right now to take some questions. Gautam, great to have you with us here. Thank you very much. You know, in the US, we seem to be in the throes of another pullback rally. And this after, of course, inflation undershot for the first time, I think, in a year. What's your sense? Will the rally continue? If it continues, what are prospects looking like near term for our market? We're practically at new highs.
I think the US currently is, I think, witnessing a bunch of bear market rallies. In fact, the rallies are so violent, if I can use that word, is that you almost think that some of the US markets, especially the NASDAQ, is behaving like an emerging market. So in some sense, I think that is clearly what's going on. But I believe that this may be short-lived. Of course, some of the biggest market gurus in the US have been calling for a recession and have been calling for a major correction in the equity markets. We haven't seen significant evidence of that coming through in terms of the recession, at least, though the absolute correction for the NASDAQ and the S&P is in double digit. Now, having said that, with respect to India, you know, we're the second best performing market in Asia after Indonesia, which is fantastic. So we're year to date down only about 5%. We've significantly outperformed the MSCI emerging markets, which is down 26%. We've outperformed China, which is down as much as 32% this year, and also the S&P, which is down 16%. So I think we've had a very good year so far, and there's more positivity coming through. Having said that, I think the one factor that you must keep in mind is that the Indian equity markets have been supported for the past about 18 months or so by domestic demand and domestic retail and institutional investors, not so much by foreigners. So while investors in India, I think, will continue to put money to work, but I think incrementally that share of their wallet will start going into fixed income as yields become more attractive.
Gautam, hi, good morning. You know, we were having this conversation with Ramesh Damani yesterday where he said that India is now becoming not just a manufacturing hub, of the world, but one of the largest manufacturing hubs of the world. And we are sort of standing at the threshold of, a big move in that sense on the manufacturing front. As a retail investor, how does one play it? What are the sectors that could be, or the stocks, companies that could be big beneficiaries of this?
Yeah, I think the manufacturing bit is certainly happening, and I think we must caution the fact that we are one of the many that MNC companies are looking at, which is great. I think this should have been done 20 years ago in India, and I'm surprised that it took as long as it did. And frankly, the Modi government is, I think, definitely responsible and takes all of the credit for pushing India into that direction. Now, if you look at Nestle, for example, which had apparently its best quarter in 5 years, it was heartening to see a company like Nestle, a multinational company like Nestle, bring in their global board into India for their board meeting. And every time that happens, and I've seen this in the past, when global companies end up, physically having a board meeting in that country, it ends up then being followed by a spate of investments that come through. And I think until the global board doesn't physically visit India, not just Nestle, I mean even other manufacturing companies and other companies in general, they will not get a sense of how vast and how big the appetite in this market is, how big the opportunity really is. So I think I hope we see more of that happening going forward.
Hi, Gautam. Morning. I recall the last time we chatted, you're obviously cautioning us, like most on the street, about the elevated valuations that the Indian markets are trading at. You didn't rule out the possibility of revisiting the June lows as well. Do you believe that still that could be a possibility? We go back to around that 15,000, 15,500 odd levels?
Yeah, that's a good question. The way I see this is as follows. That, as I said, the only thing that's been holding up the market in India, in spite of the relentless selling that we've seen this year by foreigners, which is about roughly 20 billion odd of year-to-date selling, has been the domestic investors. Now, the domestic investors, I think it's not so much out of the love for the country or basically being nationalistic, but a lot of the fact was their investments are driven by the fact that there were no significant investment opportunities for their incremental savings. Now, if you look at what's happening with respect to interest rates in India, I mean, I don't have to tell you, but if you look at fixed income and fixed deposit rates, for example, a Shriram fixed deposit rate, 5-year cumulative, is giving you a 8.9% yield. Tata Capital's FDs are giving you 8% yields. So you're starting to see that momentum coming in. And I think, frankly, at some point, the investor base, which has obviously been relentlessly putting money into SIPs, we've hit a new record of over 13,000 crores last month. I think you will see some of that incremental money going into fixed income and other products. That's one. Second is with respect to China's reopening. You've seen a big rally in China on Friday, as well as yesterday. I'm not sure if it's going to sustain, but the fact is that the Chinese government, especially after Xi Jinping got elected for his third term, I think has gone into overdrive and will go into overdrive in reviving their economy. Now, as much as foreign institutional investors, and I've met a lot of them who complain about the fact that over the last 30 years, India has done so well, given over a 2,000% return, MSCI India versus MSCI China, which has been flat. You'd really made no money in the last 30 years, point to point, that is. But a lot of these people are complaining the day China reopens, you'll see a lot of money flowing back into China. I see that happening. I've seen that in every cycle. And some of that money could exit India as well, because given how expensive we are at 21.7 times calendar 23 versus China, which is at 9.5 times. So the valuation differential between India and China now is way too big to not make a case for investing into China. So I see these two issues potentially dampening the market, and of course, not to mention a potential U.S. recession and a major correction there if it were to happen.
Okay, well, the stock of the moment right now is Apollo Tyres, undoubtedly 6% higher on that stock. Gautam, I wanted your thoughts here, because this entire auto space has been doing really well. A big pickup, whether it's electric vehicles, it's tire makers, global plays. Within this basket, do you still see both valuation and growth headroom in any of these names?
I do see the fact that the auto sector, I think that big jump that we saw, now we're at a run rate of 4 million, which I think has happened. Now, from here to go to 5 million in the next 12 months, I think is going to be a very difficult situation. I don't think that's going to happen. What will happen, though, is the current steady state will continue. I think the other factor to note, which is in today's economic times as well, is with respect to the wedding season. And usually that gives a massive push to demand for cars, for homes, for jewelry, of course, garments, shirtings and suitings. We've spoken to a whole bunch of garment manufacturers, companies like Raymond, for example, who are doing extremely well given the wedding season. So the Confederation of, and let me read this right, the Confederation of All India Traders has put out a survey. Apparently, they said there are 3.2 million weddings happening between the 4th of November and the 14th of December. And the total spend will be 3.75 lakh crores. I mean, that's massive. I know weddings are an annual event, so it's not that I'm saying something new, but what is new is that you haven't seen that kind of spend for the past 2 years because of COVID, and this itself, I think, will help the auto industry in particular.
Oh, you're saying 3.2 million weddings in India between November and December in less than 2 months?
That's right. That's exactly the quantum of weddings that are actually going to happen. That's what the survey said.
That's a lot of weddings.
32 lakh, Sonia. That's not. We used to, growing up, we used to hear this. I mean, actually, even now, the typical Delhi newspaper headline would be, I think, 5-6 lakh weddings a night, right? I mean, during those auspicious nights.
Yeah.
30 lakh over 2 months is par for the
That's a lot
course.
of weddings, a lot of jewelry being bought and consumption, right? I mean, look at the boom if people are spending so much. And like he was saying, I mean, it's like people haven't had weddings or functions in over 2 years. So now it's coming back in a big way.
Oh, absolutely. Gautam, we'll leave it there. Thank you very much for joining us. Great speaking with you. Appreciate you joining in. With all of that perspective right now. 3-point change in the Nifty. We're at 18,331. So it's almost now dipping into the red. We have the management of Borosil Renewables joining us now. They posted a muted set of second quarter earnings. Revenue growth was tepid at around 5%. Margins contracted to 24% compared to 34% same time last year. And they were hit by rising input costs. In more news, Borosil Renewables has also recently acquired 86% stake in Interfloat Group, which is the largest solar glass manufacturer in Europe. Pradeep Kheruka is chairman of the company. He's joining us now to take some questions. Mr. Kheruka, thanks very much, as always, for being here on CNBC-TV18. Let's start with that margin compression detailing, if we can, Mr. Kheruka. What happened and how are things panning out in Q3 so far? Are things easing out a little bit?
What happened, of course, was that there has been an increase in the cost of input. That is one. The second is that we are ready to commission our next furnace, the SG3, in a matter of weeks now, and we have obviously had employment for that. So our employment bill has gone up, but there has been no corresponding sales coming out from that furnace yet. So the costs are being borne by the existing business. And at the moment, whatever costs we had, for which we saw escalation, seem to have flattened out. So now what we need to see is how prices are going to prevail coming in from China. We've just heard news last week that prices have gone up by 5% in China. So that should that bodes well for us. And of course, having acquired this company in Germany, we have greater access to the European market, which gives us better realizations than here. So that is also a positive thing in our favor.
Okay, all right. Good morning, Mr. Kheruka. Well, let's take it piece by piece then. You said that your margins got impacted because it could be probably a one-time manpower cost, since the cost is being incurred, a one-time cost, and the revenue is not really happening. So on a steady state, what should the margins look like from here on? Because they've slid drastically in the last few quarters. So what is the band you should be comfortable with? And given that you're going to be commissioning this new unit, which will be effectively doubling your domestic capacity, For
Yeah.
quarter 4, do we see peak utilization levels out there from the expanded unit?
The demand for glass is enormous, and we do not see any problem at all in selling 100% of the new production. In fact, a lot of glass is already being imported, and we shall just step in to replace the imported glass. So sales is not an issue at all. The only question here is the question of the input costs, and the input costs are there. You see, even with all of this, the EBITDA percentage is still 26%, which is not bad. I think what is happening is that we are suffering from comparison in the past. At one point, I think in the third quarter of the year 2021, we had very robust earnings because the prices had risen in China very, very dramatically. Prices had doubled there. And so we were able to get those earnings. But what we are seeing now is a steady state kind of thing, and I do not see that there should be too much of a problem going forward.
Mr. Kheruka, I think the reason we're asking you is also because not only have the cost of input prices gone up, but there's a lot of cheap glass being manufactured right across the world, whether it's in Vietnam, Malaysia, and the operating cost is cheaper there. So the competitive environment has also gone up. Given all of this, will it be easy for you to maintain these 26% margins, or could it get worse before it gets better?
Let me correct any misconceptions anybody has about cheap glass. There's no such thing as cheap glass. Okay. The glass being made in Vietnam, in Malaysia, is more expensive than ours. We have the lowest cost of production in the world. Yes, it's a fact that their glass is subsidized and ours is not. We pay all the taxes that are due on any manufactured product, whereas the other stuff is subsidized. So we have a countervailing duty on glass coming in from Malaysia. Vietnam has not yet had enough glass shipped to India for us to make an application for that, but we soon will. And I think that should definitely, see some traction. Plus, at the moment, there is no import duty on glass whatsoever, which is in itself a little strange because there's an import duty of 25% on imports of solar cells. There's an import duty of 40% on imports of fully built up modules. So there is no reason that glass should be free from duty. We have taken it up with the ministry and we'll have to see what comes out of that. The other side of this of the coin is that we have operated in very competitive environments for most of the last 50 years. So we are no stranger to that, and we expect with continuing innovation and other measures that we take, we should be able to get back on top sometime soon.
Okay, Mr. Kheruka, on that import duty, of course, was available to you till recently, right? Not very long back, and then it was not renewed. You're saying you're taking it up with the ministry, and hopefully something should come through. Anything you can tell us? Anything more?
Not on this, because nobody can predict what the government will do. But it's up to us to request them to bring us in line with the other inputs which are seen, which are being used in the solar value chain, and there's no reason to keep us out of it. So there are at least 6 other companies which are coming up in the solar glass field. So it's not that we have any kind of a monopoly, so everybody's going to be impacted by that, by the absence of duty.
Mr. Kheruka, just one quick question. Your capacity goes up to 2,000 tons by 24?
What we are going to do is the thing that the duty was not going to be renewed came as a surprise to us, and therefore what we are planning to do is we're going to stabilize production on the third furnace, and then we will take up the fourth one. Earlier, it might have been that we would have taken it up faster, but maybe there might be a lag of 6 months or so from the time that we commence production and the time that we embark on the next project.
All right, Mr. Kheruka, let's try to get a couple of numbers then. From the next quarter onwards, should we assume margins at around 30%? Should that be the new normal?
I never give forward-looking projections.
Will it improve, Mr. Kheruka? Will it improve from quarter 2?
I find it very difficult to answer that question because this whole thing is very volatile. I believe that we have I believe that we are operating at a certain level, and it hopefully should be around that. And that's what I believe. That's what I hope. But
So margins have bottomed out.
I cannot say so for a fact. But the margins are where they are now, and with new production coming in as well for us, things should be all right.
Okay, all right, Mr. Keruka, we leave it at that. Thanks a lot for joining in. That's Borosil Renewables. By the way, the Bank Nifty is the one that's holding fort. But other than that, the market is very quiet this morning. The Nifty is absolutely flat. Couple of stocks that deserve mention. We've been talking about Greaves Cotton and Apollo Tyres. But Balkrishna Industries, after a 4% initial slide, it's now up 3%. The management had a conference call as well a while back, and the commentary was fairly stable over there. So now 4% higher. But Balkrishna Industries has had a very volatile past. It's reacted severely on the day of its numbers. So we'll just wait for these reactions to settle. PB Fintech is up almost about 3% and Exide post its numbers has been gaining ground as well. But the Indian economy has seen a V-shaped recovery. That's the word coming in from Home Minister Amit Shah. Speaking to Network 18 Editor-in-Chief Rahul Joshi, he also said that the government has a roadmap to tackle the inflation situation. Listen in.
जहाँ तक महंगाई का सवाल है, पहले कोरोना के कारण और बाद में रशिया और यूक्रेन के युद्ध के कारण पूरे विश्व की सप्लाई चेन में बिखराव है और एक वैश्विक समस्या है जिसका असर कम मात्रा में भारत पर भी पड़ा है। मगर मैं देश की जनता को, गुजरात की जनता को सुनिश्चित करना चाहता हूं कि टेम्पररी फेज है। नरेंद्र मोदी सरकार ने बहुत अच्छे तरीके से इसकी रणनीति भी बनाई है और दुनिया में कोरोना के बाद मंदी से सबसे तेजी से उभरने वाले देशों में से एक देश भारत है। हमारी अर्थव्यवस्था वी शेप में रिकवर करी है और अब इस पर भी काफी अच्छा असर पड़ेगा। शायद रशिया यूक्रेन युद्ध न होता तो अब तक तो हम बाहर भी आ गए होंगे।
All right, that's the Home Minister Amit Shah in conversation with the Network 18 Chief Rahul Joshi. Well, you know, we got the market, which is, by the way, advances to declines ratio is still favorable, more advances as compared to declines, but the gap is closing. 1150 stocks are higher and about 800 stocks are lower at this point in time. Look at Policy Bazaar if we can. It's up 3.25%. There are new names which are coming into the mix after the opening stocks that we highlighted. Greaves has cooled off a little bit, but still there's about a 6.5% gain. That's Policy Bazaar and Greaves Cotton. And I mentioned RVNL earlier. And now look at RailTel. RailTel is another one which has come up with about a 3.5% gain. CMS Info is up 4%. So it's not a bad-looking screen. I mean, the Nifty is not doing very much, but that was the case yesterday as well. It was a very long list of volume-led gainers in the broader space that we had. We take a quick break here. Next up, Nikhil Chopra of JB Chemicals and Pharmaceuticals joins in to discuss their second quarter earnings performance. Later, we'll also connect with Vikas Jain of CLSA to talk about key market trends, his outlook going forward. Stay with us.
Co-powered by